Hello there, this is Daily Wrap-Up. I'm Edison Yantaran for Money Move. Markets reversed course and moved sharply lower today as several Federal Reserve officials commented on moving rates higher at a rapid pace upfront in the tightening cycle. Fed Chairman Jeremy Powell noted today that a 0.5 rate hike is on the table for May, and markets are now pricing in the 97% chance of this move. Yields climbed higher today with the US 10-year yield now at 2.9%. Meanwhile, technology and growth sectors underperformed with the Nasdaq down over 2%. The energy sector also fell over 3% today, even as crude oil prices moved higher. The VIX Volatility Index also moved higher today, up nearly 15% to 23 levels, and underscoring the risk of sentiment in markets. Central banks globally are on an inflation-fighting battle. Several central banks across the globe have begun raising rates alongside the U.S. Federal Reserve in order to temper the demand to bring down elevated inflation. Last week, Edward Jones heard from the Bank of Canada, which raised its target rate by 0.5% to 1% and indicated that balance sheet reduction will likely begin soon. Other central banks, including those from Korea, Singapore, and New Zealand, all raised rates by 0.25% last week as well. The exception to this was the European Central Bank, which remained on hold at its meeting last week, still at 0.0%, but recently indicated that a July rates hike is now on the table. These all set the stage for the next Federal Reserve meeting on May the 4th. In the view of Edward Jones, the Fed will likely raise rates by 0.5% at this meeting and indicate the start of a balance sheet reduction program at a pace of $95 billion per month. Markets have priced in 3 consecutive 0.5% rate hikes by the Fed, which has also put downward pressure on the bond markets. Some of this pressure may ease as yields have now priced in aggressive rate hikes, and the pace of this upward movement will likely moderate. First quarter earnings growth surprises to the upside thus far. We have now had about 18% of S&P 500 companies report their first quarter earnings. Thus far, trends have been generally positive as 80% of companies have reported an upside surprise versus expectations. While companies have expressed some caution around rising input costs and uncertainty around growth as well as geopolitical crisis in Ukraine, Russia, generally we have seen earnings remain intact, in part driven by healthy consumer demand. More broadly, earnings expectations for the full year now call for 10.2% year-over-year growth, ahead of 7% forecasts that were in place at the start of the year. In the view of Edward Jones, this positive earnings growth helps offset the valuation compression that the company may continue to see as the Fed raises rates, setting the stage for modestly positive returns in the year ahead.